In the last video, I had asked you, for the same price, what would you prefer? Just one flower or a whole bouquet? Let me ask you another question today. What all can you buy for a maximum of 100 rupees? Confused? Watch this video till the end and find out the answers to both questions. Have you ever experienced that you created a perfect looking equity mutual fund portfolio based on your friends or colleagues' advice, but the returns from this portfolio are not meeting your expectations? Or are you trying to create a perfect equity mutual fund portfolio that includes a mix of small cap, mid cap and large cap, but you're confused about which mutual funds to buy and which to avoid? Even if you shortlist the funds, how will you decide what weight each fund should have in your portfolio and what decisions you should make regarding the ups and downs of the market? On top of that, you also have the stress of submitting different purchase applications for each fund and regularly reviewing the entire portfolio. To solve this problem of mutual fund investors, HDFC Mutual Funds has introduced the HDFC Diversified Equity All Cap Active Fund of Fund. This is a fund that will invest your money in various equity-oriented mutual funds. It will also switch between those mutual funds according to market fluctuations and will keep a constant watch on the market. While in normal mutual funds, you get the expertise of one or two fund managers, in this fund of fund, you get a whole team of fund managers. The HDFC Diversified Equity All Cap Active Fund of Fund will invest in units of equity-oriented mutual funds and will switch between these funds based on market conditions to maximize the returns for the investors. The selected funds are managed by their respective fund managers, which means investors not only get diversification across small, mid and large cap funds but also benefit from the expertise of different fund managers. So, is it hybrid or a multi-asset fund? No, this is a mutual fund, but it is a fund of funds, which means instead of investing directly in equities, it invests in equity-oriented mutual funds that are capable of managing their funds independently. So the investor gets double the expertise. So if we talk in broad terms, you get a perfect blend of large, mid and small cap mutual funds that are diversified and flexible in themselves. By investing in HDFC Diversified Equity All Cap Active Fund of Fund, you benefit from the expertise of multiple fund managers. When an individual's investment strategy works like a DIY model, they often keep investing more in the segment where they have generated higher profits recently. For example, if a small cap mutual fund has generated a good amount of profit for the investor recently, they would want to make additional investments in small cap mutual funds again. This concept is also referred to as recency bias. Recency bias can prove to be wrong in long term because if funds are not diversified across different caps, profits can be affected. HDFC Diversified Equity All Cap Active Fund of Fund takes this into consideration and will diversify your investments across different caps to maximize profits. Now let's take a look at the key facts of this fund of funds. It is an open-ended fund of fund scheme that will invest in units of equity-oriented schemes based on varied market caps. The objective of this scheme is long-term capital appreciation. Its benchmark index is Nifty 500 TRI. The fund manager for domestic investments is Srinivasan Ramamurthy, and for overseas investments, the fund manager is Dhruv Muchal. The asset allocation strategy is very simple. The exposure to equity-oriented mutual funds will range from 95% to 100%. The investment amount in this NFO starts at only rupees 100. The exit load within 1 year of the allotment date is 1%, and after 1 year from the date of allotment there is no exit load. This fund is suitable only for those investors who are interested in long-term capital appreciation. And lastly, the most important point to note is that due to investments in equity-oriented schemes, this fund of fund falls into very high risk category on the riskometer. In simple words, your mutual fund investments are subject to market risks. Now the question arises, should you invest in this fund of fund? As investors, we all have different age, life goals, and risk-taking capacities. Therefore, before making any kind of investment, it is essential to consult your financial advisor. If you have done thorough research about this fund and have also consulted your advisor, you can click on the link to the HDFC Mutual Fund website provided in the description box and invest in this NFO. And if you are looking for an AMFI registered mutual fund distributor who understands your goals and risk-taking capacity and can help you buy the right mutual fund, you can fill out the Google form provided in the description box so that we can connect you with an AMFI registered mutual fund distributor. If you like this video, please do not forget to like, share and subscribe to the channel. Jai Hind, Jai Bharat.